Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 20th of December. All right, let me just try and make odds and ends of what's going on in the market here, because we're getting to the stage where this Omicron is overshadowing a lot of the central bank activity, and the market's trying to work out what's going on. Now, last week, we had the Fed, Bank of England, who else? ECB, Swiss National Bank, Bank of Japan meetings. Right, we're a bit of a surprise rate a hike by the Bank of England, but that didn't really clear things up. And it looks like, let me just come over to the charts. The way these currencies are moving, like the US dollar is now consolidating, right? You compare all the central banks of what they're doing, where they are, etc., in their economic cycles and everything else. And the US still stands out for my liking as the best, or they're in the best position. Now, as far as the Omicron goes, right, this is a separate factor which is screwing things up. We've got the safe havens here, dollar yen, dollar Swiss, or the Swiss and the yen, right? Not exactly setting the house on fire, right? It's like, from looking at this, we had the immediate reaction where the market went and bought Swiss and bought yen. That's been a bit of unwinding there. You're starting to get a bit of dollar presence on top of that. That is not a very clear situation to be tracking. And then if you're looking for, are the markets in a really good state? Well, the price action like this, particularly say euro, I mean, obviously sterling, you're getting massive price blips up and down a lot of these pairs, and some massive moves on dollar CAD for that matter as well. Like, that is not easy, right? And there's too many factors. Like, usually in normal market conditions, you don't have this many variables creating this much chaos on the technical aspect of the market. So, like, looking at this, like, I know we've got to redraw the trend lines to where we are, but just leaving them where you are tells a pretty clear picture that the market isn't exactly sure what the hell is going on. So, like, we're now sort of coming into the start of the holiday period, right? From this week on, from today onwards, the price action, well, everything's out on the table already, right? You're not going to have any new central bank activity updates. So, I don't think it's clear as day. If anything, to me, running into the new year, I think the US dollar is going to consolidate. These other pairs, sure, there's been some adjustments by the central banks, but nothing to really outdo the US, or where the US economy is and what the Fed are up to. So, it's hard. Like, this is where the frustrating part of trading comes into play, and you've got to be a professional and look at it and go, yeah, this is just too hard. Like, we're looking for easy trades, not trying to pick the odds and ends out of every situation here, because otherwise what's going to happen is you're going to come unstuck and end up losing cash. So what I would advise you to do is just go back through, redraw your trend lines, see where the current market levels are, right? The dollar is consolidating. These currencies haven't blown out of their recent range by any stretch, right? So there's still potential opportunities. You can come back through and sort of like the Kiwi there. There's no real sort of lows here. You get this bottom one there, but that's about it. There's no real sort of clearly defined price action that you can sort of hang your hat on and go, you know what, I like the idea of getting long dollars here, or short euro, sterling, whatever it might be. The good thing is, out of the way, we have those central bank meetings. So just as I tidy up these charts a bit, and you're looking for answers as to where these things are going. Now, when you come back and have a look at the overall picture here, now the US Treasury yields, right, they've had their day in the sun. They were dominating the market a month or two ago, right? Where the yields were sort of going all over the place, especially when it was we were trying to work out what the Fed's plan is. Now, the Fed have come out, told us very clearly what they're doing. The market is already factoring in, or starting to factor in now, all the other central banks have done, potentially 3 rate hikes in the US next year, right? Inflation has been tagged by Jerome Powell as basically close to out of control. They've got to do something about it. Equity markets, what do we do here? Well, it's not exactly clear. I would expect, with the movement into the new year, with interest rate hikes on the cards, I can't imagine they're going to go through the roof, right? That we've seen in the past. The major currency pairs, right at the moment, you can't see too much like clear defined price action here with the US dollar dominating or one other specific currency pair. So the market is now entering the holiday zone and just very passively, right? We've had a massive flush out of longs and shorts on both sides of the market last week. And now it's time to sort of come back and have a look what's coming up. So there are a few things coming out this week for those diehards that are looking for, a last bit of price action before, excuse me, before the Christmas period. Okay. Retail sales figures in Canada, by all means. The consumer confidence numbers out of the Eurozone, definitely worth having a look at. You've got GDP numbers out of the UK. Now, sterling seems to be under pressure a bit, so that's going to be interesting to see. The US numbers are more interested in the PCE price numbers, even though they are final ones, consumer confidence, and some existing house sales numbers, right? So that's where my head's at. And you've got a few extra personal consumption numbers coming out on Christmas Eve, right? So, you know what? I don't think there's a lot to gain from chasing the market at this point. Funny enough, 23rd, 24th, we've got a lot of big US numbers, right? They're sort of chunky. Durable goods, PCE price index, personal consumption, etc., are well worth having a look at. And you've got the jobless claims, University of Michigan sentiment numbers, etc., there as well. So the dollar could give us a clear run from this week into the first 2 weeks of, January, right? So that's where we're at. It's almost a shame that those US numbers aren't sort of really out like tomorrow, right? Get a couple of days of normal trading before the market liquidity sort of disappears, because we're going to have all these numbers, and if they are all strong, well, the US dollar is going to continue to rally. But then we're going to go into the period of where the public holidays shut down the markets, no liquidity and no real traction. So maybe some short-term trading opportunities this week around those US numbers, UK numbers, and some of the Canadian numbers. Outside of that, you really want to come back, have a good close look, at the technical aspect of the currencies. We do have some levels coming up here. The support level there on euro, not exactly like huge. It's only had 2 touches, but you know what? It doesn't look like things are getting better as far as the Omicron situation goes across Europe, the UK, and everywhere else. There's still a bit of a scare factor or fear factor in the market. So what the market does, it gravitates back towards the US dollar as a bit of a safe haven. The Fed's got a clear plan. It makes a lot of sense to start buying US dollars. But what we're doing is we're running out of time for normal market conditions to try and get into that trade and run with it. Okay, so it's a bit of a funny one, right? We'll be shutting down a lot of the updates, I'd say by 21st, 22nd, and then you know what? By then, I'd suggest, you have a bit of a holiday and wait for better market conditions. But this week we've got lots of US numbers coming out. Check them out and see what you can make of them. Cheers, guys. Have a good one.